Hi everyone, this is Aki with another tax video going over tax mistakes in our series here, and we're going to go over 5 tax mistakes that have to do with filing the incorrect status or claiming wrong dependency. And if you're doing either of these, you're either leaving money on the table, so you're not claiming the dependents you should have and some of the other things that we're going to talk about, or you are claiming things you shouldn't, and you might receive a letter from Uncle Sam or least favorite uncle. So either way, we want to make sure we prevent these mistakes. So the first mistake is filing the wrong filing status, and there are 5 filing statuses, and I actually go over them in detail in another video that I'm going to link in the video here. And just to go over it quickly though, if you want to find out if you filing the correct filing status, number 1, you want to make sure you provide all the correct information if you're filing with a tax preparer, so they know your situation. If you're doing it yourself, make sure you provide all the information being asked in the tax software. You can also use this "What is my filing status" interactive assistant that's on IRS website, and it will ask you specific questions, and based on that, it will tell you what filing status you should be claiming. Number 2, if you're claiming dependents that others supported, then what happens is you may receive a letter from the IRS asking you to provide information that you should be claiming these dependents. Now, Publication 17, it's a very useful publication by IRS. It has this definition of, who is your dependent, and it has all kinds of criteria, and you can be a dependent qualifying child or a qualifying relative. And maybe you have a child that's under the 24 years old and a college student, and it seems like it could be a dependent, but let's say the child provided more than half of his or her support, and they're making enough money to really not be your dependent anymore, and they should be claiming themselves. So in that situation, they'll be incorrect. Maybe you a grandma, and your daughter is living with you and she has a child, and your daughter doesn't have a job. Maybe you should be claiming your grandchild. So those are situations where you might be either claiming or not claiming a dependent correctly. So it's very important in the tax software. The software will provide you with some questions, and you just have to make sure you answer them correctly. The number 3 issue is if you're filing not as a dependent, but you were. So in our example here, we were talking about the college student. Maybe you are still in college, you're 22 years old, and you're filing taxes, and you're filing as not a dependent, but really you did not provide more than half of your own support. Even though you have a small job on a side, your parents are still providing more than half, and they're trying to claim you, and while you're trying to file as not a dependent. So that can trigger a e-file rejection, either on your side or their side, and there has to be a correction. So what happens is, you can only file claiming this one person once. So whoever's filing second and gets the e-file rejection, they will have to file on paper, and then IRS will review those returns and see which person should be claiming the child, or whether the child is not a dependent anymore. And that exposes your parents' return to examination and more detailed review. So you want to make sure you're on the same page if that's the situation, especially if you're just young adult. You lived with your parents, you're still living with your parents, you have a job, but you want to understand, if they're planning on claiming you as a dependent or not. However, if you should be claiming a dependent, you should make sure that you get those credits, that you can receive for claiming a relative. Let's say maybe you have a parent that is living even on their own. If they're your parent, that's one exception. They don't have to live with you, and they don't have any other income, and you're providing more most of the support, they're not earning more than 4,300, then in that case, you should be claiming that parent as your dependent. So in both situations, this is really like the basic of tax return, but it's complicated and it's very hard to sometimes keep track of these definitions because they can also vary depending on what we use them for different credits, for head of household filing, and so on. So you want to be careful there. Now, the fourth mistake that people make is they do not include Form 8332, which releases claim to exemption for a child by the non-custodian parent. What does it mean? When you have parents that were divorced and their children involved, they can sign, in court an agreement, fill out Form 8332, and basically that form, you can release for which year you're releasing exemption and you're splitting credits for your children. So you could do it with your spouse, sign this form, and this form would have to be attached to the tax return by the parent who's non-custodian parent, and you would say, I'm releasing the claim to exemption for maybe the current year or maybe for the future years. And I've seen, when people do it like every year they switch. So you could do that, and basically what it means is that release a claim of exemption for your child so that the non-custodian parent can claim an exemption for the child, claim the child tax credit, additional child tax credit, and credit for other dependents. And here I have a little table that summarizes what happened if you do have the 8333 attached. So the custodian parent could claim the earned income tax credit, child independent care credit, and head of household filing status. But the non-custodial parent, if you include in that form, you are allowed to claim the child tax credit, additional child tax credit, and credit for other dependents. So, if you're not including that form, you're missing on getting some credit for being the non-custodial parent, even though you can't claim some of these other things that the custodial parent can. You're leaving money on the table if you are not including the Form 8332. Now, finally, the last tax mistake in this category is if you're filing married filing separately, instead of claiming injured spouse relief, Form 8379, to offset spouse's owed debt. And it's also that I'm going to link it in this video. I go over the detail, what it means. So what happened is, let's say if you're filing with your spouse and one of you basically has some debts outstanding with the federal government from the past, and so you should receive a refund, but your refund will be taken and basically used to pay off the debts. The entire refund would be if you're filing together, married filing jointly. So some people, what they do is they try to file married filing separately, but if you do that, there are actually some disadvantages. You can claim some education credit, an income tax credit, and so on. So what happens, you're losing on that. So people are not aware that you can actually file married filing jointly and include the injured spouse allocation form, and it does allocate how much of the refund should be allocated to you versus the spouse that owes the debts. And the person who doesn't owe the debt should be able to receive that part of the refund. Now, this only works with refunds, not with tax liabilities. So, you want to be aware of that. Those are the 5 different tax mistakes that taxpayers commit, if they're using incorrect filing status or dependency, claiming the wrong dependents or not claiming the dependents, as well as not including the Form 8332 by the non-custodial parent. They're leaving money on the table because they should be receiving some credits for supporting a child. They're just not being a custodial parent. So definitely something to watch out for. Hopefully this helped you make sure that you're not making these mistakes. So thanks for watching.